In this video, we will be discussing the future of the modern prop firm trading industry. Stick around to the end to receive a free trial of our prop firm passing system. So, there's been a lot of turbulence in the prop firm trading industry these past few years, particularly in 2024. And as an industry participant, as the founder of Prosperity Algo Solutions, and as somebody who trades both personal capital and with prop firms, I wanted to share my observations based on my knowledge of the Forex space. And really, I wanted to touch on three different points here that people are generally a bit concerned about when it comes to the future of the industry. The first one being the compliance concerns and the regulatory concerns. The second one being the solvency of some of these institutions. And the final one being more the concerns regarding the business model of these prop firms in general. And when I say prop firms here, I'm really referring to the modern new age challenge-based prop firms such as FTMO or the Fivers. Not obviously the true live money prop firms, which have been around since the 90s or likely earlier than that in an institutional context. So to first discuss maybe the comparison to Forex brokers. So a lot of these points that I'm going to make today are based on comparing prop firms to an existing well-established industry. So a lot of the same things we're seeing now with prop firms, particularly related to the regulatory issues, occurred previously with the rise of the Forex and CFD brokers. So CFD brokerage really started to blow up in the early 2000s and with the rise of day trading in general. And how the industry matured, how regulators reacted, and a lot of the legislation around that occurred during those years. And if you're curious about this, I encourage you to go and just look up your securities regulator of choice and read some of their rulings and documents on how they proceeded with the original Forex and CFD brokers more generally. And frankly, I think prop firms, you can get a good indication of the future of the industry by looking at what effectively happened to the CFD broker space. And at the same time, along with CFD brokers, I do think that the iGaming industry, so effectively the internet gambling business, is also perhaps a good case study for us to observe, just to get an idea of where these different industries might lie. Because to the middle point here, prop firms are kind of an interesting beast. They're perhaps subject to less compliance as they don't actually hold funds relative to a broker. But at the same time, in some ways, they're quite similar to more of an online casino. You're effectively playing a game and being rewarded with fees or with the results of challenge fees of other people. So it's almost in some ways similar to online poker or online casinos more generally. So through the observation of the CFD business as well as the iGaming industries, so how the progression of online gambling has been going the past few decades, I think that can give us a pretty interesting starting point. And really here, I think we can start off with compliance concerns. And especially with what happened with my Forex funds, with the CFTC and the Ontario Securities Commission stepping in, people are worried that perhaps the introduction of regulation might significantly deter new entrants or might destroy the industry. And an example which I might want to kind of do here is link this to the Forex industry and the CFD brokers, and specifically the use of offshore jurisdictions. In many ways, prop firms are very similar to brokers as they're effectively leverage providers for trading. And we saw with the introduction of the CFD industry is at the beginning, many even Western-based brokers offered extremely high leverage. And when people started to get burned through the use of overly high leverage, many jurisdictions effectively started clamping down with the maximum leverage that people can use in their regulated accounts. Like in the US, I think it's 40-1 is the highest. And even the UK and Australia started putting in place different categories for professional traders versus retail traders. And they severely limited the leverage available to people. And what happened there is many brokers essentially just moved offshore, or they opened entities offshore. Like, you can check out any favorite broker, even those that are ASIC regulated or FCA regulated, and they oftentimes have an entity which is located on a beautiful Caribbean island where they're not subject to the same regulations. And you as a trader, and very much thankfully so, you're able to choose what broker you use. You can choose to have like a Canadian or a US regulated broker, but you can also choose, generally speaking, to have a Vanuatu-based broker. And they definitely all have pros and cons. Like, the spreads and the leverage available is significantly better with offshore brokers. And some of them actually get the best of both worlds by having the parent entity based in a Western country. So you get access to the reputable banking services of that Western country, but with the more forgiving regulations of the offshore jurisdiction. And all of this to say is brokers manage to get more favorable regulatory conditions by exploring multiple offshore jurisdictions. Even those which are EU-based, for instance, went to Cyprus just because they had a more forgiving regulatory regime. And I think it's not a huge stretch to say that many of the prop firms could likely benefit from similar conditions. Like, here I'm giving the example of Blueberry Funded, which is one of the new broker-backed prop firms. And we can see that it is very much based in Vanuatu. So although Blueberry Markets is an Australian company, or I believe that's where their head office is, the actual prop firm is based in Vanuatu. Or, no, pardon me, St. Vincent and the Grenadines, not Vanuatu. They had an entity in Vanuatu for a bit, but this one is St. Vincent. And by being based in St. Vincent, they are subject to essentially zero regulations on forex brokers. And so all of this to show that if regulations were to get too strong, there's nothing stopping them from doing exactly the same thing they did with brokers and taking advantage of other jurisdictions to run their business out of. So perhaps this kind of alleviates some of the more compliance-related concerns. And we can now move on to more of the solvency concerns here. And this was really a big issue in 2024 with a lot of the more influencer-based prop firms who were unable to meet liabilities and debt obligations or effectively make their payouts. But I think a good chunk of this was due to the inexperience of the owners and management teams of said firms being able to understand how to manage risk in more of a market-making environment. So they just didn't know how to adjust spreads and adjust trading conditions and how that would affect the probability of having to make a certain payout. They didn't understand hedging. They didn't understand how liquidity providers work, all of which caused rapid implosion of many of these firms. But what we're seeing, and this is similar in the iGaming space, a lot of the bad actors effectively go out of business because people no longer trust them. And simultaneously, what we've seen in the past few months is really the emergence of a lot of very reputable broker-backed prop firms like IC Funded and Blueberry Funded as well, who are able to combine the brokerage, liquidity management experience along with the prop firm specific skill set. And my personal opinion is that essentially now that the big boys are getting into the game, we should see improvements in solvency just because we now have people who understand how risk management works. And ideally that leads to a more sustainable industry. And moving on to the final point here of the business model concern. You'll see this often if you listen to trading podcasts and to different people in the space. And some people are very strongly concerned that because prop firms work in a B-book model where they essentially act as the counterparty to paying you out, they will suffer from having profitable traders, and therefore the model is not sustainable because they're incentivized to have people continuously losing. And once again, I think we can use the broker example here, whereas there's hundreds, if not thousands, of brokers out there who successfully B-book and act as the direct counterparty to their traders, and they're still running very profitable businesses. But one big caveat here is really that in the early years of the prop firm industry, there has been an exceptionally favorable risk reward of the prop firm model. What I mean by this is some people could effectively trade like how they would never trade their personal capital, taking exorbitant risks because they know that their risk is capped at whatever the challenge would be. And because of this, they've been getting these insane payouts, which are also extremely difficult to hedge for the prop firm. And this has been causing issues. This has really been causing the unsustainability of the model. But what we've been seeing recently is the introduction of rules which are forcing people to trade as they would with personal capital, and such as like max risk limits. You can only you have to make a certain amount of trades to actually pass your prop firm challenge, etc., etc. So effectively, they are starting to force people to trade as they would with live capital. And how this is really interesting is by shifting the trading style back to what they're traditionally used to in a brokerage environment. They now understand how to properly debook said traders. Simultaneously, if people start trading in a more risk managed way, that also makes the hedging of their trades significantly easier. And what I mean by hedging is, let's say somebody opens a position on Eurodollar, the prop firm could in theory hedge their trades against a liquidity provider and actually take a live money trade on the back end in order to manage their risk. So there's all of these possibilities which start to open, but effectively I think there's no reason why a B-book hybrid model can't be sustainable as long as the ownership really knows what they're doing. So that's kind of my summary of all things prop firms today. But I believe that the industry should be long-term sustainable, because if brokers did it, if online casinos did it, and if smart people have figured those out, there's no reason why they can't also figure out this model. So to kind of wrap up here, I'd really encourage you guys to head over to our WAP page linked in the description, where you can actually get a 7-day free trial of our Pass Prop Firms bundle, where we give a proven strategy to pass prop firm challenges. And I would think that this is probably the most turnkey guide on how to pass prop firms on the market. Not only that, it's actually been used by us to pass prop firms. So I would highly recommend you guys check it out. Take care.